following is an update and technical analysis on crude oil, West Texas Intermediate futures based upon the daily interval. We had some big headlines rock the crude oil market space where OPEC had just confirmed the production hikes and crude is beginning to tail off and get crushed, where West Texas Intermediate just broke below the $70 handle, wiping out the 2025 lows. And it is looking like this could be the start of something much bigger. Trump's pressure campaign on the cartel is clearly working, forcing their hand into an output increase while also ramping up the squeeze on Iranian exports, opening the door for U.S. producers to step in and grab more market share. But the big issue is global supply is already running 450,000 barrels a day above demand and the medium, with surging output from the U.S., Brazil, Canada, and Guyana flooding the market, where OPEC had already been under pressure to defend prices. And this move just flipped sentiment bearish in a major way, where hedge funds have been scaling back their long positions. Technical levels are clearly beginning to crack. And if this downtrend gains momentum, we could be looking at a much deeper sell-off ahead, where is this just a shakeout before another OPEC plus pivot? Or is crude about to unwind in a way where no one's ready for, breaking and undercutting a big-time major reactionary low off the September 2024 major reactionary lows, and we are starting to undercut that key inflection point as of now. Make no mistake about it, this is a clear, massive, head and shoulder, classic-looking top, and that could be within the beginning stages of taking out its underlying neckline on a prolonged move down to the 67 and 66 handle, which are big, key technical levels that need to be defended by long traders and or bull traders really at all costs to avert an additional bigger, much larger breakdown sell signal. These were major reactionary lows and big-time buyer defense within these key multi-year price support level, and that will be the next eye in the sky to watch. Short sellers, they want to see an additional bigger sell-off on a revisit, on a re-challenge of the 66.89 handle if and when that level were to go with conviction on a solid infused daily candle close breakdown below that key inflection point, ought to issue in a secondary sell signal and a prolonged rush on a bigger collapse down to the 64.59 handle, which is ultimately big time monthly price interval support, where the market of crude is now left to the mercy of relentless supply and really shifting geopolitical tides. If and when West Texas Intermediate fails to hold some of these key levels, the avalanche of selling could accelerate, forcing a brutal repricing that few are prepared for. With hedge funds pulling back and global producers flooding the market, the stage is set for a showdown between economic reality and OPEC's fading control. Long traders, bull traders need to defend, really have a whipsaw-like reaction on a re-challenge, a reclaim of this primary neckline price support level to go on to re-hone in on challenging that big-time resistance level at the 70.67 level. That is big-time price resistance, call it multi-year, with major reactionary lows and highs really across the entire sphere there. Long traders need to pop that level to go on to re-challenge its 50-day and 200-day moving averages. Call it just a ton of price resistance up above to go on to take out some of these key inflection points to re-challenge the 77 price support level. Any scaling in long trade setups, look for a potential bounce right at the 66.89 handle for any day traders if and when some of these key inflection levels hold. And if not, the 64.59 would need to be held by long traders and long-term investors really at all costs to avert additional, much larger margin calls, forced liquidations to go off in an all-out rush towards the emergency exits.